What's the forecast in your mind look like?
Yeah, good morning. It's interesting because we've kind of been saying that volatility has really misbehaved overall this year. So, if it's going to not continue the playbook, it might as well, I guess, do that in September and October. But look, if you look at the last 10 years, Dom, VIX is supposed to rise in both September and October, and often it does in August, even though I think most investors don't think of it as August as a high volatility month. And then, there are several catalysts we look to that we think can jumpstart it, including analyst days, conference season, and obviously the beginning of earnings, which happens in early October.
So we're showing the VIX right now for good reason, because you mentioned how volatility is relatively muted. 23 is roughly the long-term average for where the S&P 500 volatility should be right now. Is that a good or a bad sign in your mind?
Look, a VIX of 23 is still high, and I think most investors kind of have this psychological 20 barrier on the VIX, at least during the pandemic era. But, we've seen spikes of the VIX to 80 that happened during the pandemic. And the question, I think, is, in this new environment for volatility, and by that I mean, the last 10 years prior, we had a very, very different rate regime than we are going to have going forward. I think that you do continue to have this bar at 20, and volatility does float higher, in particular as you start to get more data points from the September FOMC, from inflation, and as people start to adjust to those. We think it does kickstart and follow the playbook for September and October. You will continue to see a higher volatility level.
Amy, one of the things I know you look at, a lot of options traders look at, is something called skew, right? They look at the relative price of call options and similar downside or upside protection put options. Is there anything that we can glean right now for the price of options as to whether or not there is more demand for upside protection or downside protection?
Yeah, that is a really great question, because skew is essentially, I would say, our barometer for demand for downside protection. And that metric on a historical basis, and this is for the S&P 500, is still relatively low on a 5-year basis. If you look at the SDEX and you look at that percentile, it's still quite low compared to history. Obviously, that encapsulates the time that we had the pandemic. And one reason for that, Dom, is unfortunately, hedges have actually not worked out this year. Part of that is, path dependency, and part of that is we did have this drawdown, but then we had this big mid-June rally. So if you actually look at what has worked out this year, it has been put selling. But of course, it's very difficult to tell investors to do something like that in an environment where we have aggressive rate hikes as well.
Now, before we let you go, Amy, one of the things that you often look at is kind of where you see some of the heat developing in certain parts of the market. Are there certain sectors, industry groups that could see more volatility given what you're seeing in the options market right now?
Yeah, I would say some that are not too surprising is you're starting to see more uncertainty in Europe, given the gas situation, as well as in Asia than you are compared to the U.S. So that's on a geographical basis. On a sector basis, it's interesting to me because we continue to see the small cap, the Russell 2000 volatility low relative to tech. And a lot of people, are questioning whether or not that's overdue to turn. You also see that in consumer, which again, I don't think is that surprising as we head into conference season, and you do see some negative pre-announcements in the consumer space.